You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. Happy Wednesday. Today we are Investment Roadmap Day 3. So quick series this week, and we are ending this on next Monday. It's an investment roadmap telling you how to start from scratch and start investing, like setting your ground rules, setting the stock research screener, and then today we're going to talk about narrowing down by sector. So on Monday, we discuss like how you should shape your strategies, like having some investment rules to know where you want to go. And then on Tuesday, we started to talk about how to use a stock screener. And if you want to know more about that, you can go to dividendstocksrock.com/roadmap and you will have the complete roadmap written. So sometimes it's a little bit easier to read than to listen to. So dividendstocksrock.com/roadmap. So we started with a universe of like roughly 1,200 stocks, like dividend paying stocks. Like, of course, I'm giving myself as an example. I focus on dividend growers. So starting with the stock filter, saying, well, there's about a little bit more than 1,000 companies paying dividends in Canada and the US. Now, using the stock screener yesterday that I explained, I'm down to about 400 stocks. Still way too much to invest, right? So now it's time to narrow this down by sector. Because what is great is, there are 11 sectors. So roughly, if you have a stock research giving you about 400 companies, it means that you're going to have about 40 to 50 companies each. What is great then is you can filter by sector and look at them one by one. So before we start with this, first thing, you don't need to invest in all sectors. You could be good with at least like 5 to 6 sectors to have like a well-diversified portfolio, but you don't have to force yourself to invest in all the 11 sectors. So if you don't like REITs, you don't have to have REITs in your portfolio. If you have like no understanding on how healthcare works, or you don't like materials, well, there you go. You can scratch those off. That's all fine. The point is, you're going to find great companies in each sector. But let's not go crazy, right? Don't pick all of those. And I'm going to give you some steps that you can use so you can narrow down more efficiently. So step number 1, you go with your stock screener. Hopefully you can download it into an Excel spreadsheet, the way we do it at DSR actually, or you can use the platform if you want to work on the platform itself. But you just select the first sector on the list, like communication sector, staples, consumer discretionary, whatever. And then you're going to go from roughly 400 stocks to probably maximum 40 to 50 in one sector. Likely you're going to have like some sectors with like less than 20 stocks, which would be cool. But imagine that you have like 40 stocks. It's still less overwhelming than looking at 400 companies, right? And you're not in a rush. So you can do this like one day at a time. You just look at a sector and then you look at those companies one by one. The point is, once you just focus on one sector for the day, the goal again is just to select the best companies out of that specific sector. So you put kind of like a note there. You're building your potential buy list, not necessarily companies that are going to go into your portfolio. Of course, we're not there yet, but you're starting to eliminate some. How you can do that? Well, of course, you're not going to go through 30 or 40 financial statements, right? So like this, the step number 2 is, how can you quickly go through 30 stocks or 40 stocks? Well, first, don't look at the business model yet. Don't look at your investment thesis, but still go back to your ground rules. Your ground rules will tell you, that's in episode number 1. You can filter this sector by the metrics that are more important for you. So for example, I focus on companies increasing their dividend every single year. So in my stock screener, what I will do is I will sort them by the 5-year dividend growth rate. So the highest the dividend growth rate is, the first one will be on my list. So it's going to help me maybe discard a few stocks that made the first cut, but then shows like a dividend growth rate of like 3% annualized growth rate over the past 5 years, where I could find many companies in that sector at like 5, 6, 7, 10% dividend growth rate. Well, then I'm going to focus on the high yield, the high single digit, double digit dividend grower, and maybe forget a few one. Then step number 3, you give the priority to numbers, not to the businesses or the stories, because numbers speak a lot louder than stories. I know it's super interesting and super exciting to invest in a sexy story, like a business that has like plenty of growth vectors, that has an amazing business model. Everyone's won their products or their service, and it's just too good to be true. It's going to explode and it's great. Well, that's the story and it's important. But at this stage, you want to narrow down by facts. So numbers are facts. You do not have to interpret anything. It's just like real numbers telling you what's going on. What I prefer to do, though, is not to look at the analyzed growth rate for the past 5 years for the dividend triangle. So looking at revenue growth, earnings per share growth, and dividend growth, I prefer to look at it in a graph to see the trend. So it's easier to discard some stocks with a shaky dividend triangle. So, like a triangle where like revenue goes up and down and eventually goes up. So you have an annualized growth rate that is positive, but really it's not that stable. So I prefer stable trends that are going like up steadily than kind of like a one-hit wonder where the company made a big acquisition. There was like a huge earnings and a revenue jump 3 years ago, and since then, nothing. Well, yes, your 5 years numbers are going to look great, but the point here is what's going to happen going forward. So yes, it's great to look backwards, but you still need to think about the future. So we have filter our list by sector. We have sorted them by the metrics that are important. Now we gave priority to the number. Step number 4 is to select maybe like maximum 5-6 companies in that sector. So the goal here is going from that universe of stocks, of dividend paying stocks of like 1,200 down to 400 with the first filters, right? And then by selecting 5 or 6 companies per sectors, just based on the numbers, you're like barely looking at the investment thesis or anything at this point, really just looking at numbers and graphs. By doing this, you're going to have a smaller basket of like 50 to 65 stocks and maybe less, because 6 companies out of like 11 sectors, that makes 66. Chances are you're not going to be able to select 6 great companies for each sector. So chances are you're going to have a tiny basket, maybe like 40 or 35 stocks on that list. So it's going to be your short list where you're going to dive into, and we're going to talk about that tomorrow. So how you can analyze stocks in a good way, in an easy way, in an efficient way. So of course, this strategy, this technique is not perfect, but it's going to cover a lot of ground in not much time. So the goal here is to grow your conviction, feel less overwhelmed. And as I said, we over like 3 days, we went from not knowing what you're going to do to have a clear strategy, to have a stock filter that gives you like 400 stocks. And now we know how to drop that list from 400 to potentially around 40, 50, maximum 60 stocks. You have not looked at one business model yet, and you're already with a short list that like roughly half of them could be in your portfolio, and you would be able to build a very solid portfolio. So that's great, right? So numbers are the number one thing in my mind, because it's easy to get hype up on a story, but if the numbers are not there, it's just like smokes, right? You don't want to go there. If you want to go deep inside those 3 steps already before we move on to step 4, you can download the DSR investment roadmap for free at dividendstocksrock.com/roadmap. You will receive the PDF guide there. It's 100% complete. So from like the day that you decide to invest all the way down to the day that you have fully invested, you have every single step lined up. So very useful guide for you to download. So, all right, Moose, tomorrow we're going to talk about day 4, stock analysis made easy. That's going to be a great one. And as usual, do not forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.